Good morning, everybody. Good morning, Cav. Nice to see you. Bob B, Wayne, Renegade, Brendan, nice to have you. Erla, welcome to the room, guys. Happy Monday morning. We survived the weekend, all that time not trading, and now we're back. Good stuff. Hope everybody's doing well today. Hope you guys are feeling all right, ready to do a little moving forward. I posted a couple pictures in the room, guys. Feel free to scroll up and see them. They're not from today. One is from, I think, June 2023. The other one's maybe from December 2023. But I want you to look at those pictures, and I want you to recognize that what we're doing is what we've been doing. What I teach every day is what I've been teaching for the last 5 years, guys. The approach of this room is to teach a trade, to teach one trade that typically wins more than it loses, to teach one trade with recognizable rules and patterns, and to build a foundation. And then from that foundation, you get to grow. So we are at the beginning of your journey if you're with me today and you're new. And where you are is not where you're going to be. I don't know how it could be if you're moving forward a little bit each day. So I wanted to say that. Hey, good morning, Miss Trina. Happy Monday to you. I wanted to say that because, it's funny. I was having a conversation over the weekend. Early start. Oh my gosh, I've been up for a while. Good morning, Miss Jen. Nice to see you. Or good afternoon, yeah. Early start for you because you're 2 weeks behind us. I forgot about that. Did you guys know that in the UK, daylight savings is 2 weeks later than the US? You would think that they could coordinate that just to make life easier. This is the 2 weeks that separates the weak from the strong. the overachievers from the underachievers. I forgot where I was going with that. Patterns. Guys, we've been doing the same thing forever. And you know what? I totally lost my train of thought. Squirrel, total squirrel. I do that sometimes. Recognition, patterns. That's what we're going to do. So I'm sure that it'll hit me before the day's over. I'm in a rambling sort of mood. Had an awesome weekend. Played a lot of golf. Hung out with friends. It was a good time. So every morning, guys, forexfactory.com/calendar. This is one of your patterns. Your pattern is checking news every morning, making sure that there's not high impact news. And Monday, March 10th, there's none. There is no news to speak of, which is kind of nice. So nothing going on till 10 a.m. tomorrow, really, when Jolt's Jobs Openings comes out. But I check this every morning, not because I'm worried about what news is being released, but rather the reaction that the market may have to it. And then everything that I talk about comes from the Nexgen software services website. There's no secrets. That's the cool thing is while I don't give you everything you could ever do with this software, because guys, you discover new things to do with this software. I give you a solid foundation. It comes from the trading guide, and inside the trading guide is everything that you need. There's a trading plan, understanding the indicators, understanding trend and momentum, terminations, entries. All the things that I talk about every morning come from this page. I'm not making anything up. I'd like to wish that I was that smart, but I'm probably not. But from the frequently asked questions area, this is where I show you your foundation, your first trade, your basic trade, your remedial, your 101 trade, whatever you want to call it. This is your high probability trade, guys, and this is a trade when each indicator on every chart agrees with the rules for the trade. This is when triggers are their strongest and no termination conditions exist. This is when there's no trouble. between you and your targets, guys. This is the best of the best. This is your first trade. This is the trade that typically wins 70 to 80% of the time. And I love this trade because this is a trade that gives you the potential to be profitable while you really learn to use this software. This is a trade that, because of that win percentage, that potential for wins, there's the potential to create an awful lot of confidence. But most importantly, this is the trade that's going to teach you to read your indicators, to learn to read your charts, guys. That should be the goal in the very beginning. Learning to be a successful day trader isn't a 7-day endeavor. Learning to be a successful day trader is a repeat process every day of looking, of seeing, of noting, of learning to take the information that your indicators are giving you and then making a decision on whether or not it's telling you it's time to take a trade. And what you'll find, the more you become familiar with the software, the more you become in tune with your chart reading, is that you'll realize that about 90% of your day, each and every day, is really doing nothing. It's just reading indicators. It's waiting for advantages. 10% of your day is the active trading. So if we sat in front of the market today for 6 hours together and all we did was wait for this one trade to set up, we might be active 36 minutes. There would be a lot of thumb twiddling and playing solitaire off to the side. But what you find is that the wait is worth it, because if you're putting yourself in a position to take a trade that typically wins 70 to 80% of the time, you don't need to catch 40, 50 trades a day to be a successful trader. You don't need to be in every move. You don't need to be the first one in or the last one out. You just need to be able to recognize a couple advantages and really hop on them. You will understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. That's going to be the byproduct of your education with me in this room, is you're going to begin to recognize these things and you'll work them into a plan that suits you. You're going to be able to do that through the high probability trend trade, and that is a trade with only 3 rules. That's one of my favorite things about what we do in this room, guys, is the simplicity. There's only 3 rules that you need to learn to build this foundation to become a chart reader. You need to understand strong triggers. You need to be able to recognize a termination condition, and then your first entry with the software is going to be the entry for a high probability trend trade. These 3 rules create 3 advantages. So every time I look at my charts, every time I open my software and I look at my charts, I'm asking myself if I have these 3 advantages. If I do, well, then I have a trade. And if I don't, then I don't have a trade. Then I'm in that 90%. Momentum and clear path, these first 2 advantages, these are the 2 that I really want you to focus on. So if you are brand new with me, and I know that I've got a couple of you in here, really just commit yourself to understanding momentum and clear path, because once you have these 2 down, that's when people begin to see the next trades. That's when people begin to understand how to capture bigger moves, how to stay in a little longer. It's also when they start to recognize when they should pump the brakes and embrace that 90%. So momentum and clear path are the core of everything that we do. Your first entry area, rule number 3, is specific to the high probability trend trade. Know where your rules are found. Your large chart leads the way. Your large chart is a very slow moving chart. It's a broad stroke of a brush. It paints a general picture, shows the overall opinion of the market. Your large chart, using the first bar, the most current bar, the active bar on the large chart, you'll be able to define direction, momentum, and areas. You will have your first 2 rules met through only that first bar. So you're going to look at your large chart and you're going to say to yourself, I have momentum because I have those strong triggers, and I have a clear path because I haven't reached any of the areas that could be problematic. And then once those 2 rules are true, we're going to refine that one bar, that very broad stroke of the brush, and we're going to use the smaller, faster chart. And the small chart shows about 20 to 30 bars worth of price action that's going on inside of this one bar. And you'll see from the very top of the bar to the very bottom of the bar on a small chart, you're going to see what looks like a reversal in trend, which is just a little push down. And you're going to be able to pinpoint precisely where to get into the market. And guys, that's going to reduce risk and it's going to increase profit potential. And this smaller chart is nothing more than an entry chart. It's giving you the ability to pinpoint where the big picture is most likely to bounce and continue. And we use this. This is it's a metaphor. Who are you trading with? You should be trading with the large crowd, because the large crowd are the men and women. They dictate the trend and they create the momentum and they react at those key Fibonacci areas on your large chart. So when you trade with the large chart, you have a higher chance of success. It doesn't mean that it's the only trade, that you can only go with the trend, but remember, this classroom is designed to teach you the best of the best so you have a solid foundation so you can grow from it. Your small chart, I want you to think of it as a small crowd. And small crowd's misleading. You're like, oh, well, they don't mean anything. These men and women still have more money and more influence than you'll ever have on the market. And they create what's called a retracement or a pullback. And all this is a tiny move that is counter to the underlying trend. And the underlying trend has been established by the large crowd. So when they say up, the small crowd goes, hey, we're going to push down. We love the small crowd because what they do is they fail typically 70 to 80% of the time. And your rules for entry on that smaller, faster chart are designed to get you into the market where their failure is most likely to happen, which also happens to be the point where that little retracement is most likely to bounce and continue off with the large chart. So it's only 2 charts and it's only 3 rules. But remind yourself, this is my foundation. This is my basic. This is just getting me in tune with what I'm seeing, and then you will grow from it. So my first hour every day is the same thing. It's repetition. I firmly believe that repetition creates a level of recognition, and there's a path to getting to where you want to be ASAP. Everybody's path is different, but if you embrace this, it typically gives you an advantage to get to where you want to be quicker. So we're going to take an hour. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. It's pretty simply focused. It's okay to trade when your rules are met, and it's not okay to trade when your rules are not met, because your rules describe a pattern. And that pattern must be proven to win more than it loses to work its way into my rules. So the pattern that we're talking about today is the same picture that I posted in the room from 2 years ago. It's that momentum in clear path, always, and then refining to be able to find your entry on the smaller chart. And guys, this pattern has been going on forever. This pattern has been repeating itself forever. The market just kind of does the same stuff. It has a memory. We've identified this pattern, and this is what I teach to you every morning. You guys have the ability to simulate. And the simulator is the batting cages. It's the driving range. It's taking free throws when there's nothing on the line. And guys, simulator is building muscle memory. So one of the most important things you can do as a brand new user is know what you've done right and what you've done wrong. And you will do things wrong, guys. You're human. But if you post your pictures in the class, if you post your trades in the class, if you post your questions in the class, if you're looking at a chart and you're like, oh my gosh, I have absolutely no idea what's going on here, take a picture of it, drop it in the room, and what happens is you get a private session. There's other people watching, but you and I will look at your chart. We'll talk about what you saw, because you're going to tell me what you saw. We're going to talk about what you did great, and we're going to high five and celebrate victories. We're going to talk about what you could have done better. I'm going to work with you and give you a plan to avoid mistakes. And when you write why on your charts, when you talk about why you did what you did, guys, it's not necessarily for me. I've been doing this long enough. It's hard to surprise me. What you're doing is you're creating a recipe for longevity. You're creating a look and a pattern and a recipe to repeat the things that are great And you're writing a recipe to avoid mistakes. Every time you write the whys, what happens is you can go back and you can look at those whys and make sure that they're repeatable. So post in the room, post lots. You can't post too much. Trust me on that one. And then we're going to simplify today. Guys, I oversimplify. There's so many things you can do with the software. There's so many different trades you can take. There's so many ways to take advantage of these things. I'm going to give you the most rock solid basic plan. I'm going to give you a plan that's designed to optimize your chances of success. I'm going to give you a plan that you can go back and test and prove it wins more than it loses. But you've got to know what looks you're going to commit to. You can't follow a plan if you don't understand the rules. So we're going to just keep reinforcing the rules, and you've got to learn the patterns until they become easy. And that's the second piece of the puzzle to getting to where you want to be ASAP, guys. I thought I had it open. Use the spreadsheet that I'm about to give you right now that Nexgen gave you when you downloaded software. It's available for download on the website, but I just dropped mine in the chat box. Steal mine, because I update mine almost every day with your pictures. And there's 4 tabs. So there's the basic rules tab. Strong triggers, clear path, and green. That core, that base, that foundation that you're going to grow from. Know the difference. And once you know the difference between a strong trigger and a weak trigger, or a clear path and a termination condition, guys, you've got what you need to be profitable consistently if you can follow the plan. You're going to see client trades. That's the second tab. This is almost, it's probably over 400 trades by now of just you guys embracing momentum and path, showing me patterns. And guys, some of these go back pretty far. I'm going to click on that one. That's from February 2023. And all it is momentum and path and a pullback to an area inside of triggers. The exact same thing that we're going to talk about today has been doing the same thing for years. There's the entry sequence, because great entries create very manageable trades. There's a reminder on how to do it for longs and shorts for the high probability trend trade. There's management. I'm going to give you a management plan, but here it is in pictures. Just some of us are visual, some of us need to hear it, some of us need to hear it 1,000 times. My hand is raised. And then once you have that very basic foundation for management, guys, you're going to grow. You're going to grow outside of it. And then patterns repeat themselves. And the patterns aren't just the high probability trend trade, guys. That's not the only thing that happens in the market. I'm going to show you something cool. This is from 2004. This is Nexgen teaching a trend trade in 2004. Nexgen also taught an edge trade in 2004. You're going to see that in the classroom. Nexgen taught a momentum trade in 2004. Guys, we've been doing the same thing forever. The picture has really been the same. It's just, it looks a little different. It's gotten easier to read over the years, but it's just patterns. So you'll start to see patterns, take pictures of them, and then guys, building your plan is where your pictures go. So let's say hypothetically, you take a trade, and it is the perfect trade. It's the highest probability trend trade you could ever take, and it has that momentum, and the path is clear, and the entry is clearly defined, and you're like, man, this is the best of the best. This is the one that wins more than it loses. You're going to go over here, and you're going to take this one, and you're going to drop that link into your spreadsheet, and you might say something really insightful, like, never miss this look, because that's your best of the best look, guys, and this is the foundation from which you'll grow. So fill this one out, make it look like the client trade section with your hard work. And then finally, there's the trade journal. I skipped this one when I started with the software, and it was like shooting myself in the foot. This trade journal is where you're going to begin to recognize not only the patterns in the market that are bringing you success, you're going to recognize the patterns in yourself that may be sidetracking that success a little bit. You'll notice that there's a place for pictures. There's a place to describe those first 2 advantages to make sure that you're really focused on them. And then there's a place where you can talk about the feedback that you received in class. And this is where the dividends get paid, guys, because you're going to start to see patterns. You're going to see Never miss this one. This is great. What a great trade. Best look ever. And that's what you're going to focus on repeating. But you're also going to see things like, again, my hand is raised, indeterminations, 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 and it's going to repeat itself. Guys, that's your pattern. That's your focus. That's the one that you and I are going to work around, that we're going to figure out a way to avoid. So if you use this spreadsheet and you start to really track your trades, you'll get the most benefit if every morning you go back and you ask yourself what worked and what didn't work. So this morning, I hope you opened up your spreadsheet and you went back to Friday's trades and you said, hey, what worked? Man, momentum and clear path. What a recipe for success. And then you'll ask yourself what didn't work. And if this were me 5 years ago, trading in determination conditions produced an awful lot of losers. Trading without momentum, hoping the market continued, produced an awful lot of losers. Not waiting for the best entry, getting run over, produced a lot of losers, guys. So I had to go back and do this, and it prepares you for the day and it sets you up for success because you will begin to recognize these patterns. So my promise to you is that I'm going to give you everything that you need to be successful with the software before the first hour is over. And then you're going to grow. There's this Japanese philosophy. We talk about it in here a lot because I discovered it and it's pretty neat. And it's Kaizen is the word. And I don't know if I'm saying it right. But Kaizen is the idea that every day, there it is if you speak Japanese, every day you can get 1% better. Every day you can take one step forward. Instead of putting the pressure on yourself to be great each and every day, to be at the finish line before the race ever starts, guys, just grow a little bit each day and know that that's how it works, right? That is the right pronunciation. Thank you, Wayne. Phonetics rarely escape me, but you know, sometimes. So we're gonna do that. We're gonna learn some basics. You're gonna have everything you need, and then we're gonna grow together from that. You're gonna get to where you want to be through your work, through your participation. So let's learn some stuff. It feels mellow today. It feels super laid back today. Maybe I just got a lot of sleep. What am I looking at? When I open a chart, I need to be able to read the indicators. I need to be able to say to myself, this is a small trigger and this is a large trigger. And I'm going to tell you that's all you need to know is the difference between the two. Your small trigger is a fast moving indicator. Your large trigger is a slow moving indicator. They're moving averages. Know that the small triggers are two solid lines to create a small trigger. Know that the large triggers are two dashed lines to create a large trigger. If they're green, they're going up. If they're red, they're going down. You're going to use triggers to first define momentum. Rule number one is a result of a trigger look, strong triggers. You're going to use triggers to define termination conditions, making sure that you don't trade into areas that could stop the market. And you're going to use triggers to define your entry. So triggers come into everything you do. And your education on triggers doesn't need to go any further than small and large. And then each chart has areas. Areas are essentially horizontal lines on a large chart and a small chart. They have a different role depending on the chart. We're just going to name them. So divergence highs are going to be a magenta line, and it prints if there's a loss of momentum at the pivot that was created. So this magenta line, if price goes up and then goes down, if price changes direction and momentum wasn't following price up to this very key area, you'll see a pink line print, and it prints in different areas. And that line can behave as a line in the sand, taunting the other side of the aisle. But all you need to know is that if it's from a high, it's magenta, and it's a loss of momentum. And if it's from a low, it's cyan, which is a clever way of saying baby blue. And that's it. It's a loss of momentum. Divergence is a loss of momentum. You have Fibonacci resistance and Fibonacci support. You have yellow 1-to-1s, and you have a mid-band. And guys, these are your areas. Areas have different roles. We're going to talk about how to use them, where to use them. Just know the names. Know that this is a divergence high, and this is a divergence low, resistance, support, yellow 1-to-1s. And we're going to use these in conjunction with triggers so that you guys can find the highest probability trend trade that I teach. And we're going to let the large chart lead the way. Large chart's a slow moving chart. Large chart's a very broad stroke of a brush. Large chart is going to define direction. It's going to define momentum. It's going to define areas. And we're going to let it define momentum first. So the large chart must have strong trigger lines to give us that first advantage. Large chart's going to define direction. And direction is going to make sure that you do have strong triggers. So if the background is green on your large chart behind that first bar, the market's in an uptrend. We're looking for rules to be met for high probability trend trades long. Or if it's red, we're down. We're looking for rules to be met for shorts, guys. This is the path of least resistance. The trend is your friend. And in order to have strong triggers, in order to have rule number 1 met in an uptrend, both your small triggers and your large triggers are going to have to be just as green as the background. In a downtrend, your small triggers and your large triggers are going to have to be red, just like the background. You can't have strong triggers if the colors don't match. So that's kind of a little cheat code for you. Strong triggers means that your small triggers in an uptrend have broken away from, they're above the large triggers. Your large triggers are wide. There is no momentum in flat triggers. Your large triggers are wide, and the space created between the small and large, I want you to picture scissors that have opened up. This is the strong trigger look. And when you have strong triggers in an uptrend, the odds are favorable for the market to continue up. In a downtrend, smalls are below the large, space is created between the two, the large are wide, and when you have a strong trigger look in a downtrend, the odds are favorable for the market to continue down. Odds favorable momentum is our battle cry. Odds favorable momentum is easy to recognize because the scissors have to be open. Odds favorable momentum pushes a market. Odds favorable momentum can break key areas. Odds favorable momentum can cover mistakes that new users make. And when I have that odds favorable momentum, you guys catching on to the odds favorable momentum thing? I love language. That's when I'm buying Fibonacci support on a smaller, faster chart. That's when I'm selling Fibonacci resistance on a smaller, faster chart. And guys, on a large chart, this slow moving chart, it looks like these bars sprouted a tail, created a wick. Rule number 3, when you have this level of momentum, you're going to be able to pinpoint exactly where that tail is most likely to form. That's going to become a part of your study process. This is even without the benefit of the refinement chart, but we can know that there was a potential entry there. When scissors close, when small triggers return back to the large, when they work their way inside, this is what we call a weakening of the large triggers. When large triggers are weakened, anything can happen up or down, which means that with weak triggers, you might experience larger retracements. With weak triggers, you might experience reversals. With weak triggers, it could go up or down. Anything can happen is pretty specific as to what your expectation should be. So, strong, the odds are favorable. I love the language. Weak, anything can happen. Guys, start using language to create expectations, and I want you to see this. Strong triggers push up, strong triggers push up, strong triggers push down. Let's find some weakness. Weakness, get a big retracement. Weakness, it pulls back to the mid-band. And then there's instances where even with all that strength, the market seems to stop cold and bounce. And guys, welcome to termination conditions. But before we do that, let me ask, is everybody okay with strong triggers? Separation between the small and large. And let me throw something out there too. Strong triggers has nothing to do with those dynamic Renko bars. Strong triggers has nothing to do with areas. Strong triggers has nothing to do with anything other than the separation between the triggers. So That's rule number one. Learn it individually, and then you'll learn to couple it with no termination conditions to create that foundation. So once I have momentum, I'm going to make sure that I'm not trading into an area likely to stop the market. I'm going to make sure that there are no termination conditions. This is going to make sure that I have room to get to my targets. We're going to call it a clear path. Momentum and path, guys. That's the core. What's a termination condition? It's one of those darn horizontal lines on the large chart. Know where to find it. Termination conditions happen on the large chart. A termination condition is a Fibonacci-based indicator that may reverse the market, and it's going to be based on a comparison of that area and those trigger lines. So the trigger lines are coming back into play. We're going to look for Fibonacci support and resistance. We're going to look for yellow 1-to-1s. We're going to look for those divergence highs and lows. And guys, these lines on a large chart are where the large crowd are making decisions. These are where the people that control the market, that push the market, that establish trends, that create momentum. This is where they can shut down. This is where buyers buy and sellers sell. This is where fights happen, where reversals typically come from. So if the large crowd is making decisions on there, you're going to use that idea for the recipe to identify a termination condition. Price reaches resistance. The buyers push price all the way up to a key Fibonacci resistance level, to a divergence high line, to a yellow 1-to-1. Once price reaches resistance, you're done with price. You don't need price anymore. Now the trigger lines are going to tell you the story. If the trigger lines remain below resistance, resistance is a termination condition. Resistance could create an untradeable bounce that may pull you out of a long position. Resistance may create a fight between buyers and sellers that creates this awesome little seismograph look that's virtually untradeable. Resistance could break. Resistance breaks all the time, otherwise we'd be caught in a range forever. Or resistance could reverse the market completely. Remember, price gets there, we're done with price. Triggers tell the story. If those large triggers go from green to red from an area of resistance, if none of your trigger lines got above, we're going to call that a strong top. And a strong top, it's not even one of the rules for a high probability trend trade, but it sets up the highest probability trend trade you could ever take in the other direction. But this strong top, this little lesson we're learning from the high probability trend trade is going to carry over to the next trades. It's going to help you by being rule number one for at least 3 other trades that Nexgen teaches, and a couple other trades that you guys have made up. So price reaches, where are my triggers? That's the whole process. If the triggers are below, it's a termination condition. If it's a termination condition, rule 2 is not met, there's no reason to take a trade into that area. Sellers take over, market goes down, it is cruising, and then price reaches support. Once again, we allow price to get to the area. Once it gets to the area, we are done with price. The trigger lines tell the story. If the trigger lines remain above Fibonacci support, it may create an untradeable bounce. It might break. There may be a fight there for the next hour, or it may reverse the market completely. You will never know what the reaction's going to be. I want you to avoid words like it will, it has to, it must. It doesn't, guys. It has the potential to do all of those things. Since rule number 2 isn't met, since the triggers remain above, your highest chance of success, or not forfeiting success, I suppose, is no trades into the area. That's rule number 2. That's what's keeping you out of areas that may stop the market. Is everybody good with that? It's really not a hard recipe. Price reaches Fibonacci resistance, even with all that momentum. Look at the bounce. And guys, that bounce was to the tick. Price reaches Fibonacci support. The triggers don't break through. Look at the bounce. Straight into resistance, back to support. And what happens is you know where these areas are. You know right where these areas are, long before the market ever gets to them. So rule number 2 is going to keep you patient. It's going to keep you from trading into areas that may stop the market. But areas break. So this is going to show you what it looks like when it's not stopping the market. This is what it's going to look like when an area breaks. First, price reaches resistance. The triggers are still below. This is the termination condition. Wait for the reaction. You don't have to predict the reaction. Just wait for it. If it doesn't reverse the market, guys, it's going to break. If it doesn't go the other direction, the only direction it has left is up. So we consider an area to be broken. Your path is clear, and rule number 2 is met when both lines of the small triggers and both lines of the large triggers get above resistance. Now resistance becomes support. Now the path is clear, and your path remains clear until you reach the next line. When you reach the next line, it's right back to number 1. So for you brand new users, for you building a foundation people, this is the absolutely no trade look. We're going to wait for the reaction. This is the let me go find an entrance on the small chart because I have momentum and clear path. This is the most basic, simple approach to the software. Once you understand the difference between the two, it opens the door for the second trade that I give you a plan for. And this trade is not a clear path. This trade is not rule 2 met. This trade is not a high probability trend trade. This trade is what we call a medium probability trade. And a medium probability trade is defined as when most of your indicators line up for the trade. However, an issue exists. Your issue will be that the path isn't clear yet. And when you have an issue, you have to manage assertively. So this second look is what we call a 50-50 look, and it shows you the potential of an area to break with momentum. When your small triggers absolutely smash through an area, when your large triggers lag behind and they haven't cleared yet to create a clear path, guys, this look with odds favorable momentum is the 50-50 look. 50% are above and 50% are below. This shows you that it has the potential to break. This is going to be the majority of your trades. But you're going to use your chart reading to manage that assertively. You're going to recognize if things aren't going, because areas have the potential all day long, but they don't always break. You're going to have a plan to take that with the highest chance of success. And you'll see it here in the live market. That had the potential, but it retraced kind of deep. This had the potential, and then it went down. This currently in the live market has the potential to break because of the momentum, but there's going to be some key factors on a smaller, faster chart that are going to help you recognize whether or not you should be trying to capitalize on that look. So rule number 2, it's either a termination condition, the potential to break, or it's broken. Know the difference so you know how aggressively you need to manage. There will be times when your path isn't clear because the areas are stacked, guys. Fibonacci is this reflection of fear and greed. These fibs come to be because the market has already gone up and down. They've created these key areas. You know where they are before the market ever gets to them, and now you're in the process of learning to respect them, guys. There will be times where you'll have fib after fib after fib, or fib and then 1-to-1s and then a divergence low. And guys, this is 90% of your day. 90% of your day is doing nothing. 90% of your day is texting your wife, telling her she's pretty, playing with the dog, playing solitaire off to the side. 90% of your day is waiting for advantages. But the cool thing is it's okay to do nothing. It's all right to do nothing. It's actually, in most cases, better to do nothing. Because the futures markets trade billions every hour. They exchange billions of dollars every hour in the futures markets. You need to find a way to consistently capture $400 a day throughout the trading year, and that puts you in a 6-figure income based on $400 a day in a market that trades trillions. So you could hope an area breaks, or you could just pray that that fib doesn't stop the market, or you can follow a plan where you couple momentum and room to the next target and take a little piece of the puzzle, maybe a couple times a day, to be consistent. So is everybody good with that? This is rule number 2, guys. This is the most hated rule in the world because it keeps you patient. But look at this. The divergence high doesn't break. The market reverses. Momentum pushes it all the way down to weakness. And once anything can happen, sure enough, it does. and the market retraces. We talked about those tails being a potential entry. Ladies and gentlemen, if all you did was nothing up here for a couple hours or an hour, and all you did was nothing right here, but you found a way to make $500 or $600 in that one move with all that momentum and a clear path, you shut it down, you go play golf, you made your 6 figures that year. And that's kind of what we're looking for. So large chart defines the areas that may be problematic. Large chart is where I am going to use the trigger lines up against fibs and one-to-ones and divergences. There is one termination condition that I respect on a small chart, and this termination condition will present itself on all time frames, but you'll see it on the small chart first, guys. And this is kind of our little crystal ball to see change on a small chart, to know that things are changing on the large chart, but it's so darn slow you can't see it. So 3 divergences in the same price range may terminate a trend. 3 cyan lines from a low, 3 magenta lines from a high. Guys, this could stop the market. This could create an untradeable bounce. This could reverse it completely. This is the only time on a small chart I will accept a small chart termination condition, because it's showing me that the large chart is changing, that the large chart has the potential to reverse. The large chart's just too slow to give me that information. So if I have my rules met, if I have odds favorable momentum, if I have a clear path, this is the only thing that'll talk me out of a high probability trend trade entry. But if I don't have that, I'm going to throw a little precision into the game. And rule number 3, remember, is a small chart rule. Rule number 3 is designed only to define where the trend is most likely to continue, where the small crowd is most likely to fail. Rule number 3 is so precise that you're going to use a limit order, and you're going to buy or sell that little pullback, that fight from the small crowd, and you're going to do it in an area, at a fib, at a mid-band, or a yellow 1-to-1, because areas on the large chart can stop the trend completely, maybe even reverse it. Areas on a small chart do the same thing, but that's the bounce point to continue with the trend. It's going to stop that little push down or up by the small crowd more often than it doesn't. But the key is that those areas reside inside of triggers, guys. Triggers. So the one breath version is I'm going to use a limit order to buy or sell a pullback in an area inside of triggers, because triggers define where that retracement's most likely to go. This is a gospel truth, guys. Price comes back to large triggers. This is their large chart. Price pulls away and pulls back to the triggers. That's what gives us that great entry. There's that tail. Price pulls away, comes back to the triggers. Price pulls away, comes right back to those triggers. And it does it over and over all freaking day, every day. So you're going to use that idea to define where the retracement is most likely to occur. When everything is going up, it's going to come back down to those triggers. It does. We just have to wait for it. So your entry chart, the 5-1 chart, has large triggers. You're going to use these up against the small to define momentum. But we've also put the large chart large triggers on the entry chart. And this combination of large triggers defines where the retracement is most likely to occur, where that pushback is most likely to return. And even in this picture, you see that it happens twice. It might go through these and down to those. It might not. So if you allow those 2 sets of large triggers, those large and synthetic triggers, to overlap, to be one on top of the other, think of 2 snakes riding piggyback. Guys, you can increase your accuracy dramatically. Brand new users, your rules for entry should be a pullback to an area inside of favorable large triggers, because it reduces the risk and it increases the accuracy, and it gives you the smallest little window of opportunity where the market is most likely to bounce, where the small crowd is most likely to fail. When you grow with the software, you'll find a way to capitalize on those triggers that are split, that are away from each other, because you'll say to yourself, it could go here, it could go there. But that's the best look. Remember, we're focused on the best look. So we're going to go through an entry. And you know what? I've done this one every day for 3 weeks. I'm gonna bump to the end of that one real quick. And I'm gonna go to the spreadsheet and we're gonna define an entry straight here from the client trades. We're gonna go through and just give you guys a different look. So the first thing, rules are met on the large chart. So could you guys give me a Y if you see that the large chart, most current bar, has odds favorable momentum. The odds are favorable for it to continue. The path is clear. Guys, I've got room to the target. This is my look. This is always the look for the best of the best. Well, step one is wait for the fight. And that's a reversal bar on the smaller, faster chart. With everything screaming down, your chart has been dropping like a ton of bricks, and you're going to wait for a bar to go up. Remember, brand new users, this is the best of the best. We're creating a foundation. A lot of you in my room find a way to capitalize on this look. You'll get there. If you did jump into the market with all that momentum, this is your signal. Maybe it's time to exit. And this reversal bar, all it does is it signals the beginning of the fight. It says, hey, the small crowd showed up, they may push up. So you're going to figure out where they're most likely to push. That's your trigger lines. Identify your favorable large triggers from the top of the large descent, those two lines. This is where the retracement may go. The reversal bar is not your entry. The trigger lines are not your entry. But once you identify this range, you can look inside of that box for areas, for fibs, for mid bands, for yellow 1-to-1s, and those are most likely to create the bounce. Those are most likely to create that ricochet. Price is a tennis ball, and these are the brick wall, guys. So resistance can be red Fibonacci, magenta mid bands, yellow 1-to-1s, and your window of opportunity, the point where the market is most likely to continue, will extend from the lowest point of resistance to the highest point of resistance inside of triggers. And I think it's so important that you start using that word, inside of triggers, in the retracement zone. And guys, this defines where the market is most likely to bounce. So your job will be to activate a limit order. This yellow line is your limit order. And large charts trading all the way down here, small charts trading all the way down here, you're going to enter 1 to 2 ticks below the lowest point of resistance inside the triggers. And now you're going to pray, or you're going to hope, or you're going to wish, because you've done all you can do. You have insisted on momentum, you've identified a clear path, you've pinpointed where the market is most likely to continue, and now you're waiting for an entry. You're waiting to see if the market will come to you. And you're going to get so comfortable with this that you won't chase trades. You'll force them to come to you. But if they do, if the small crowd pushes and reaches your limit order, you're short, guys. You're in a position with odds favorable momentum with no terminations and from that area inside, and you've just taken an entry to a trade that typically wins 70 to 80% of the time. So it's important that you go through this process. It's important that you learn this very simple pattern. And guys, as a brand new user, it's important that you learn to pinpoint where the market is most likely to continue, because this is the beginning of your management as well. Because when you wait for the reversal bar, when you identify the triggers, when you create that window where the market is most likely to continue, you're reminding yourself that areas come from inside of triggers, that entries come from areas. And any line on the wrong side of the triggers, any line beyond the retracement zone, beyond the bounce points, guys, this is outside of the window. This is not part of the equation for entry. You're going to learn to ignore those lines and not hope that you can get an entry from down there. And then I lost my little setup. Here we go. Short trade, reversal bar, triggers, areas inside of triggers. And there's going to be times where there's one line. That's pretty awesome because there's no guessing. Your limit order goes a tick or two below it. That's your entry. Anything beyond the trigger lines is where the market shouldn't go. Anything beyond the trigger lines is beyond the retracement zone. Anything beyond the trigger lines is beyond the areas most likely to create a bounce. Guys, your advantage is gone once you get to the wrong side of the triggers. So we're going to use that where the market shouldn't go spot is our first stop. This is on the plan I'm giving you. Your initial stop is placed where the market should not go. It's no secret I'm a fan of language. I think it's important to use that phrase, where the market should not go. Generally 4 to 5 ticks above all the trigger lines. And this is it. This is where rule number 3 is no longer helping you. I want you to write down on a piece of paper right now. I want you to text all your friends and say, I will take losing trades. I will take perfect trades that don't win. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It just has to happen. It's math. But you can reduce your risk. You can take smaller losers by understanding where the market should not go. So everything is a matter of patterns. This is just a pattern. Your rules are nothing more than a description of this pattern that has been proven to win more than it loses. So if I have strong triggers, it's a flow chart. It really is. It's a flow chart. If I have strong triggers, then I'll identify whether or not I have a termination condition. If I have no termination conditions, then I will go to a small chart. Your large chart is trading all the way up here when you're waiting for a reversal bar. And your fear of missing out is going to kick in full throttle. They're going without me. I can't believe it. Oh my gosh, this is horrible. And then the small crowd fights. And then you're going to have those self-doubts and you're going to say to yourself, man, I don't have any room to that magenta line, and that magenta line can stop the market, and dang it, I can't take a trade. But then your education's going to kick in and you're going to say, wait a minute, I'm not taking a trade from the top of this bar. This bar is where the reversal is happening. I'm taking a trade from the area inside of triggers. And that 8 ticks turns into 30 ticks. And any risk that I had way up here is smaller down here. And the distance to my target is bigger from down here. And you're going to learn to trust. You're going to learn to insist on this entry. Because once you understand where the market is most likely to continue, you'll know where your risk is before you ever enter a trade. Pretty cool, right? And once you learn the language and where rules happen, this 1-to-1 on the small chart will never keep you out of a trade because termination conditions are defined on a large chart. These trigger lines going against you on the small chart will never keep you out of a trade because momentum is defined on the large chart. And guys, everything inside of this one bar on the large chart is all of this on the small chart. And that's why we use the refinement chart. So that's your high probability trend trade, guys. We got through that pretty quick this morning. How do I get good at it? Here's the part. Here's the stuff, guys. Take pictures. Take lots of pictures. Take all the pictures. Take 15 pictures a day. Annotate every one of them. It's hard to miss things when you commit to it. My goal for you, and hopefully your goal for yourself, is that you first look at your large chart. You always let the large chart lead the way, and you identify momentum and path. For the brand new user, you're insisting on momentum and path. For the experienced user, you're identifying those two concepts to know whether or not you need to manage your trade a little more aggressively. And this is the core of your education, guys. This is understanding these two concepts that opens the doors for more opportunities. Take 25 pictures of each and annotate those pictures. Write on those pictures. So if I'm taking a picture of a strong trigger, absolutely, Better Dad. I'm going to write smalls below the large, both are wide, space between, odds favorable, strong triggers, rule number 1 met. If I do that 25 times, if I do weak triggers 25 times, I'm never going to confuse the two. So, Better Dad, do me a favor. What market are we talking about? Yes. So, sometimes on Monday, it looks weird. Sometimes you have to reload historical data and that works. So, but what I would do, does it all look normal, just no synthetic triggers? Cool. Right click and go to templates. And I'm going to do this too. So right click, go to templates and load. We're going to make you tech savvy. And then once you click load, I want you to click on Nexgen 5.1 Renko bar chart. And what that's going to do for you is that's just going to reload the template, and it's going to tell NinjaTrader, hey, something's awry. Let's get those synthetics on there so that we can be super accurate with our entries. And that should take good care of you. There's another one of those tails with the potential to break. You guys want to see something cool? Pull back to resistance inside of the triggers. Yeah, and if it doesn't work, always grab Jason. That should get you. Look at that one. Right back to resistance, right in the retracement zone. Hold on. Potential to break. Oh my goodness. Pull back to support right inside the retracement zone. Do you guys see it? All you have to do is be able to say to yourself, this is what I have, let's go find an entry. You're just learning a pattern. Post these pictures in your spreadsheet, guys, every day. Study them until it becomes easy. And I'm telling you, I've already done a lot of work for you, but if you do just a little bit on your own, you're going to become a chart reader faster. As you go take those pictures, you're new. Let me give you some pictures, a cheat sheet. This page is called the High Probability Trend Trade Checklist. I'm going to give you all this. I promised you guys everything you need. This is a checklist to enter the market with the absolute best of the best, nothing but warm fuzzies. Holy crap, I feel wonderful about this high probability trend trade. That one starts from a strong top or bottom. But you can take the trade without, guys. It just adds warm fuzzies. And a strong top or bottom is a termination condition first, always. And then it reverses the market. And now it's a strong top, 10 bars later. First it's a termination, and now it's a strong bottom. You have to make sure you have momentum. Momentum is the same look on every chart. It's just a separation of the triggers, has nothing to do with anything else. Rule number 1 does not have anything to do with Fibonacci lines. It's two trigger lines and their relationship to one another. Termination conditions have everything to do with those lines on a large chart. So you have to look at it and you have to say to yourself, do I have a clear path? And if the answer is no, you don't have a high probability trend trade. If you're in your first 30 days, you may just pump the brakes and say, damn it, I'll wait. But you're going to be able to capitalize on some other looks with a little bit of experience. And then defining your entry, exactly where it goes, exactly where the market shouldn't go. This is your high probability trend trade checklist, guys. Have a great day, mama. Always say goodbye to your wives, guys. That's okay, Better Dad. So, Better Dad just posted in the room, and he said, Mark, that long is a 50-50. What does that mean, Better Dad? That means that it only has the potential to break, right? So when you identify this look as a 50-50, what you're saying to yourself, Better Dad, and watch this. Let's do this. I'm so glad you said that. Large chart read. Whoops, wrong one. Because this is a 50-50 look, I know this area has the potential to break, but it isn't clear. I will use my chart reading to manage this type of trade a little more assertively than I would a high probability trend trade. That's all you're doing with it. Guys, a 50-50 trade, you're just saying to yourself, I'm going to be a little more cautious. I'm going to be a little more aware. Maybe it'll break, maybe it won't. I might have to take quick profits. I might have to exit sooner. So a lot of people, Better Dad, because it came from a strong bottom, because the momentum is amazing, because the potential is there, they'll take the entry and they'll take quick profits. They'll say, oh my gosh, this divergence line could stop the market. Another divergence could ruin its forward progress. And a lot of people will take quick profits, get to break even, and be willing to exit that second contract with no money at all because they know it's only potential. So the fact that you identified that, it says to me, well, no, it's always potential. How quickly you're able to react is going to be a byproduct of your experience. But do you see how this one is also the potential, right? Nothing changed between entry and exit. You didn't have to manage it assertively, but you were ready to. You don't have to manage it assertively, but you're ready to. This one has the potential. You probably exited with 3 divergences and said, man, it's not my money anymore. And then those yahoos went down without you. That happens sometimes too. All we're doing is once you look at your charts and you say to yourself, this is where I'm at with advantages, that's what's going to open the door for more aggressive management. That's what's going to open the door and get your guard up. It's going to change the hat you're wearing a little bit. So I love that you said that. It was only the potential. Most of your trades are going to be only the potential to break better, Dad. Your ability to read charts is going to help you work through those. Does that make sense, everybody? The high probability trend trade might set up 2 or 3 times a day, maybe. Those medium probability trend trades, you're going to see a lot of those. You're going to see a lot of those. And I'm going to hand you a plan to take them best of the best. So this is your checklist right now. As a brand new user, if you're saying to yourself, you know what? I'm brand new. I want the highest chance of success. This is it. This is the high probability trend trade checklist. Is the market coming from a strong top or bottom? Do both my charts have momentum? No terminations, area inside of triggers, guys. This is the one that nobody in the history of this checklist has been able to follow it truthfully and do worse than 70%. I encourage you, assume I'm full of crap. Prove to yourself. Go back and find these rules met historically, and you can circle those tails and see how they line up. And guys, this is your foundation. This is the core. Print this out. Follow it religiously. Learn it. And then I'm going to give you a plan. Every trader should have a plan. And I know that some of you come to me with experience. Some of you have never touched the markets in your life. You need a plan. And this is the KISS plan. The Keep It Simple Sunshine plan. Or Bob B, you know what I really mean. And guys, this is just a stepping stone. This is your first trade. This is your foundation trade. This plan is designed to optimize your chances of success with the high probability trend trade. So when I say optimize your chances of success, guys, in tens of thousands of pictures, this is the highest probability way you can take this trade. It's not the only way. Through some simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Hey, Boaz, I see you. Guys, when you can read your indicators, you're going to see more. When you can read your indicators, you're going to manage differently. When you can read your indicators, you're going to see more opportunities. This is just designed to get you to where you can read your indicators, to give you a plan capable of winning more than it loses. And I've had people get funded with this plan inside of 30 days. Does it mean everybody gets funded with this plan inside of 30 days? No, you're in control of that. You're in control of how well you follow directions, but it is possible. I've seen it done. So I share that story, and I remind you that sometimes simplicity is the path of least resistance. But there's 2 things you have to know before you sit down and you're not on simulator. Why will you enter a trade? Well, because my rules are met. How easy is that? If you don't know your rules, how are you going to know they're met? So that's where the study comes in. Guys, rules are a description of a pattern. When I say I see a high probability trend trade, I'm not talking about the money. I'm not talking about what I made. I'm not talking about how I managed it. I'm not talking about anything other than I see odds favorable momentum, a clear path, and an entry inside of triggers. This is the best of the best. So my rules describe that look, that pattern. It has been proven to win more than it loses. And again, don't take my word for it. Do the work. If you do the work, you'll be with me forever, guys, because you'll know that it wins more than it loses. And you'll verify it. You'll trust this pattern. And there's no reason to not consistently enter when the rules are true. And your rules are going to help reduce emotion. Why will I exit? Because I hit a profit target. Or because my advantages that I used to enter the trade have gone away. That's your chart reading. If I'm in a high probability trend trade and 3 divergences print, my advantage is gone. If I'm in a high probability trend trade and price goes beyond the triggers and the areas inside 4 to 5 ticks, my advantage is gone. That's an exit. So guys, you're going to define your entry. You're going to take 30 days with me to learn how to define entries. And then watch this. Better Dad, does it take 30 days to define the perfect entry? I don't think it does. Not if you study. Sorry, your picture has to be a shining example. Inside the first week, you'll know that the software works. Inside the first week, you'll understand whether or not what I'm saying is true. If I'm hand-picking these pictures to try to sell you software, guys, go back and look at it. And then you're going to learn to manage it. You're going to learn to manage these entries. So your first entry should give you the least management opportunities, right? The best of the best. Your management as a brand new user should be every bit as mechanical as your entries. Because you're working through something new. You're working through the emotions of something new. You're working through the fear of trading something new. You're working through all these new concepts. And if you come to me with preconceived notions from previous trading, guys, what you're doing is you're comparing your new girlfriend to your old girlfriend. And you got a new girlfriend for a reason. Or boyfriend, ladies. Sorry, I don't mean to leave you out. So learn how to do it like we do it real quick, guys. Let your management be super basic. Let it be just incredibly mechanical, very if-then. And that's what the KISS plan gives new users, is this KISS plan management is designed to help you understand and trust stop placement. It's designed to get you focused on getting paid. That's the goal of day trading. And then there's that magic phrase again. You will craft a plan tailored to your personal goals based on your experience reading the indicators. You will learn how to manage differently, but until you can, this one is going to help remove a lot of the fear. And it is 100% dependent on your ability to enter where the market is most likely to continue. So we're going to go very if-then. And if you're a brand new user, I encourage you to let this one play out for a week or two. Learn how to move your stops. You can adjust targets soon enough. But if your entry is 2 ticks below resistance inside of triggers, then your initial stop is 4 to 5 ticks beyond the triggers. That's it. That should be really no matter where you are with the software, I think. Because that's where the market should not go. And you will know the risk before the trade is ever entered, guys. And your targets will be predetermined at $100 and $200. So this particular trade, with that high probability entry, has $150 per contract of risk, 2 contracts. You have to decide if you're okay with that. If you're not okay with that level of risk, guys, moving your stop into the retracement zone, moving your stop below areas inside, you're just chumming the waters. You are missing a big toe and swimming in the ocean, and a shark's going to come get you, guys. So if my stop isn't hit, that means the market went in the direction of my trade. That's a wonderful thing. So if a reversal bar prints in the direction of my trade, I'm going to redefine where the market should not go. And I'm going to move my stop 2 ticks above that reversal bar, or in a long trade 2 ticks below. And now I have $30 risk per contract. I have eliminated $240 worth of risk from this trade by waiting for the reversal bar. And remember, in a trade that wins more than it loses, this is going to happen more than that stop getting hit. But now there's nothing for me to do again. I have to wait and see what the market wants to do. And if they don't stop me out, it means that they went to my first target. And if price reaches your first target, one contract is automatically removed and those funds go into your account. Guys, that's a victory. That's what creates confidence. And with one contract remaining, your new stop is going to be break even. You're going to leave no risk on the trade. You are going to be paid and nothing to lose. And you're doing that because the whole premise of this trade that you took was your insistence on odds favorable momentum and a clear path. And you're learning to trust the idea that with those advantages, it's more likely to hit $200 than it is to hit than to come back and get you break even. And if it does, if it goes to your second target, guys, that's a $300 trade. That's a $300 trade. That's not your trading day. That's 4 minutes of your trading day. $300. Now, there's some things that are very common with futures traders and new traders. A lot of you believe that $100 isn't worth your time. A lot of you believe that $300 isn't worth your time. Mark, that's $300, and your brain's going to tell you that's not enough money. And a lot of you are going to try to hold through Fibonacci areas and hold through three divergences and trade into termination conditions because you have to make all the money or it's just not worth your time. Guys, $300 a day, if that's the best you do, is a $75,000 year. Throw in a break even and you're in six figures. Remember, this is 4 minutes of your trading day. 4 minutes of your trading day. One successful trade. Guys, that's a career for over half of America. Nobody steps over a $100 bill on the sidewalk. That's 25 grand a year. Remember, you're learning a new skill. This is your new business, and you're just focusing on getting good at it. So, I'm going to give you a zip file right now because I told you I'd give you everything that you need. Inside of the zip file is Chart Reading 101. Inside of the zip file is the High Probability Trend Trade Checklist. Inside of the zip file is the KISS plan. That best of the best. Where'd that go? There we go. Getting into the best trade. Managing the best trade. And then look at this, the second page. There's that 50-50 trade. There's the rules for what's probably going to be the most common trade in your trading plan. And there's that strong top or bottom. And if you didn't pay attention on the high probability trend trade, you might struggle with this one. And if you can't identify momentum, you may struggle. And you have to have momentum on both charts to optimize your chances of success. And no divergence on the 5-1 to optimize your chances of your success. It doesn't mean that you can't take it with divergence, but divergence decreases the likelihood. So much so that divergence, no trade is mentioned again, and that divergence, exit the trade, is mentioned in management. So I'm going to give you guys all of this. It's in the zip file that I just dropped in the room. Whoops. I've given you, there we go, the rules. I've given you how to study the rules. I've given you where to find the rules. I've given you a spreadsheet to go back and look at the rules, to put your study in there. You have 15 hours live every week to get feedback on anything and everything that you do. Guys, that feedback doesn't end because you buy software. That feedback doesn't end because you move to lease. This room is designed for everybody. I don't care if you're on day 1 or day 1,000. Post in my room and get feedback. Never stop that education journey. Take 1,000,000 pictures. Also inside of that file is the pictures you can take. These are the pictures that I take every time I enter a trade. I take a pre-trade picture when I activate my limit order, and I'm going to come back and study this one. I don't have to annotate it. I'm busy right then. But I'll take that picture and I'll come back and I'll make sure that I didn't miss something. I'll take a picture during the trade. Every time I take a profit, every time I move a stop, I take a picture because I'm going to use this to refine my management plan. I take the picture after the trade and I talk about everything I saw. I talk about why I did it, whether or not I had advantages. I show my entry, I show my exit. This is the one I study the next morning. And then I also take pictures with no trade. And guys, I take a surprising amount of pictures that are no trade, because if I'm focused on taking the picture and why I'm not entering the market, I'm not actually entering the market. It keeps me away from avoidable losses. And pictures 3 and 4, these are the ones that I want to see in the room. I want to know all the whys, and I really want to know the why nots. Because one thing that happens, and it's interesting, is if you show me this picture and you say, Mark, I didn't take this one because of the termination condition on the small chart, well, then it opens the door for a lesson on where we find termination conditions. Or the same thing with momentum, or maybe one divergence prints. And a lot of times your I'm not going to take the trades, a little bit of feedback gets you to where now you have another trade to put into your trading plan. Inside of that zip file also is this one. This is the Trend Trade Simple. My brother and I have been working extensively for the last 6 months as we get closer to this funding company and the browser version. And we're in this constant state of how can we make it so people can do this without us? How can we make it so Trina can go and get the browser and never have to attend a class and still find success? And this is what I came up with. Reminding you that you can come to the class, and we're going to talk about these advantages. Reminding you that these two are the most important things, momentum and path. And then this goes through the 3 rules and the charts. It defines the pieces that you're going to use to do it. It talks about momentum, shows you exactly what it looks like. It talks about the clear path, areas that can be termination conditions, how to define it, what it looks like to have a strong top or bottom, what it looks like when areas break and reminding you to be patient. It defines the entry, breaks it down all the way from start to finish, and it teaches you how to study, guys. And this is everything that we've done in the last hour, consolidated into 2 pages for the new user. So if you want to stay focused in your study, that's a great way to do it. So all of that is in the room. You've got the zip file, you've got the spreadsheet, you've got the rules, and now we're going to get into the feedback phase of class. The next 2 hours, guys, the last 2 hours are 100% devoted to your pictures, to your questions. But I'm going to remind you, because this is where new users will see people doing things that don't make sense. And this is where new users will want to say trade police. Well, Cav took a trade and he traded into a termination condition, and that's wrong. No, it's not. It's right for Cav. It's a plan that he's built on his ability to read the indicators. Cav, you're just the person that I saw. I'm not calling you out. So don't be the trade police. And remember that the key to everything is having a foundation, understanding the basics, and then compounding a little bit every day. So for you brand new users, new kids, blanket rules, you're going to feel like I've shackled you to boredom. They're very conservative rules. It's recognition of advantages. I'm giving you a solid plan that optimizes your chances of success as you learn to read your indicators. So for you new users, terms are bad. No momentum is bad. Areas beyond large triggers, it's bad. Blanket rules, because it increases the likelihood of success, guys, and it's the memory of success that creates confidence. They're not always bad, but until you have the experience to know when to use exceptions, it's safer that way. If you learn to speak in terms of advantages, you'll know when you can fudge a rule a little bit. Just manage assertively. The more time you spend with it, the more you'll see. The more trades you'll see, the more management opportunities. So learn the process that yields the results. That is from the late Mark Douglas. When you stop focusing on the results and you focus on the process that creates them, the results seem to follow. And that's where the KISS plan comes in. If you can keep it that basic, high probability trend trade, best of the best 50-50 trade, most of the people that have done that religiously, that have studied it, that have really worked hard to prove me wrong, find themselves in the 80% win range. You can find an extraordinary level of success with it. And you don't need all the other trades to be a successful trader. There's people in this room that have ditched all the other looks and all they do is trend trade. And they're doing pretty well with it. And I've watched this for years, guys. And the further you deviate from simple, the longer it takes typically to become comfortable with the pattern recognition. So question everything. I want you to learn it, but I want you to give yourself a little grace. You're okay. This is a journey. It's okay to be new. Like, it's okay to make mistakes. You're going to grow from mistakes. And remember that the software is a tool. And the tool has value when you do something with it, when you learn how to use it. This is the greatest elliptical that you could ever buy. But you're never going to lose weight if you don't get on it, right? Or if you just stand on it and don't move the pedals, nothing's going to happen. So learn to use the tool a little bit. Stop putting the pressure on yourself to be a professional day trader in the first week. Enjoy the ride. Enjoy the education. And then when we get to the second half, guys, we're just going to look at your pictures. There's not a ton of them that have been posted this morning. So I'm going to rely on you guys to ask a few questions. Really hope that you do. Are there any questions before I ditch you for 5 minutes and go take a break? Is there anything I can clear up for you? Nope. Maybe. So guys, when we get to the second half, you're going to see a lot of people doing a lot of different things. Feel free to ask questions on someone else's chart. I will go back to momentum, path, and entry on whatever you post in my room. If you post a trade and it wins, but you broke every rule imaginable, guys, this is what we call a short-term victory that typically leads to long-term success. When users get lucky on simulator, the luck rarely carries on. So I might tell you, hey, I think you got lucky. I might tell you, you fought everything on God's green earth. I'm glad that you won, but you're less likely to win with this particular pattern. And sometimes I'll say, oh my gosh, I can't believe you fought that. Let's go back and talk about those advantages. Let's look for everything good on the chart. And guys, I will definitely celebrate victories. I'm a big victory celebrator. So before I go, do I have strong triggers on crude oil on my most current bar? What do you guys think? We're going to do a chart read, then I'm going to take a break. No, because the colors don't match, right? Do I have a clear path? Price reached resistance, all the triggers are below. Price reached support, all the triggers are above. Guys, that is the famous go make a sandwich pattern. You don't even have the first two rules met. Now here is the S&P. Wow, look at that. Do I have odds favorable? I still do for the moment. And we're getting into that not quite a clear path. And you can see the small trigger starting to work in a little bit. Divergence low never broke. And look at that. It pushed up higher, didn't it? Crazy. And it turned into weakness. And look at how quickly that happened. You are not in control of the market, guys. Whoops, I think that's my untitled workspace. So every time I look at a chart, I go through that process. Do I have odds favorable? Do I have a clear path? Do I have an area inside it triggers? Ladies and gentlemen, this is NASDAQ running you over with the perfect look because it's the NASDAQ. Divergence on the large seemed to save the bacon. How so, 10K? On the ES? Identifying that it's not quite a clear path? Yep. And look what it did. The triggers returned. It retraced all the way to the mid-band. Large triggers didn't follow. And sure enough, price returned to the large triggers. Pretty cool, right? Sometimes you have to be patient. Guys, I'll be back in about 5 minutes. When I come back, we're going to go through all the pictures. We're going to talk about everything. We're going to answer all the questions. And then I'm going to set you guys free to go do a little study. So, back in 5, guys. Go stretch your legs. through and start looking at the charts that you guys have posted. Remember, we're going to go back to it in terms of momentum, path, and entry. And Wayne gets us going here. And this is 703, so I want to make sure that I line it up. 703, 703. So we're looking at odds favorable momentum, looking at a clear path. Wayne takes the pullback to resistance inside of triggers and gets paid. And guys, high probability trend trade. So everything that we just talked about, Wayne made it happen. Made it happen this morning. Jen, odds favorable momentum, clear path, area inside of triggers. You get in on the way down. Maybe you were a little late. Maybe you were a little nervous. It never gets outside of those triggers, and you get paid on the way down to the fib. 2 for 2, guys. High probability trend trade patterns. And then Bob says, you know what, Mark? You said if I do study over the weekend, if I take trades on market replay, I can bring them to class and get feedback? Absolutely. So let's check it out, Bob. Bob says this is a strong bottom. This is a termination condition that reversed the market. This is not a clear path. And Bob, it's hard to tell because of your arrow, but it looks like the potential to break. No divergence. Perfect entries. Doesn't go outside. Stop placement moved. Profits at the target. And then it just turns into a 50-50 trade. And you really could have added contracts back on. This is kind of cool. This trade goes up, turns into a trend trade, and you get paid again. I would have put a contract back on. Beautiful trade though, Bob. And guys, this is what happens when you learn to trust the large chart. When your large chart looks like this from a strong bottom, Bob's not nervous. Bob's holding. He's riding that wave of momentum. Great job, Bob. All right, weak bottom. Okay, high risk trade, weak bottom, no momentum, no clear path, terminations everywhere. And Bob says, F it, I'm going anyway. Just hit buy now, sell now, set up a limit order, Wayne. We'll do it. We can do an add-on in a little bit and look at it. This is Bob's butt trade. Entry area presented. So even though I didn't have any of the advantages, the small chart looked like an entry, so I took it. And it worked out. Way to go, Bob. Way to go. Hold on, let me see something real quick. That one lost. Hold on. That one would have lost, and that one would have lost, and that one would have lost. Those weak trades, oh shoot, that one would have lost. That one would have lost. There's a loser. Son of a, oh, rat carn sarnet, right? I get it. Guys, do whatever you want to do. I'm not the police. But I'm obligated to say, Bob, that if you don't have momentum, if there's not a clear path, you're only going to be able to pull one past the market every now and then. And man, I don't know about you guys, but my testicular fortitude is off the charts on simulator. All you're doing is you're teaching your brain that the wrong trades produce results. And I hope that that doesn't carry over into your live trading. Pivot stop out. Strong top termination reverses the market. Odds favorable. I'm trying to figure out where your entry was. 67.94. 67.94. So your entry was somewhere right up here. And it was a pullback right to an area, right in the retracement zone. From a strong top. And you ride that thing down all the way, get paid, and then you hit 67.34. Not odds favorable. Can't really be a 50-50 without momentum, Bob. No areas inside of triggers, and you get in anyway against two divergences from a termination condition with weak triggers, and you get paid again. This one, all day long, great job. This one, taking chances again. No momentum, not a clear path. And then better dad, strong top, if we just use the language. So price goes up and comes down, and there's a loss of momentum, and that's what creates the divergence line. So here price creates the line. And then the bounce comes up, and see how price reaches the line? The triggers don't break. That's what creates the termination condition. And then when that termination condition reverses the market, there's your strong top. In this particular look, when price exceeds divergence and comes back below, is called a pivot stop out. So absolutely, yeah, the first one is not a termination, but when price reaches that line and the triggers don't break, it becomes one. And then when that termination reverses the market, now it's a strong top. Great job. And great read, Bob. But do you see the difference between the two? And again, I'm not busting your chops. These are your trades. This one has all the momentum, room to run. This one has none of the momentum. You got lucky and predicted a strong trending market. And a lot of times on market replay, guys, and I don't know if you did this, Bob. Did you trade gold? Or did you trade the day that you're retrading? Did you remember that it turned into a strong trending market? Did that affect? Yeah. Guys, it's dangerous. So market replay. You can go back and replay the day. I'm going to give you my little how to do it effectively. Because Bob, I used to do that too. Man, I know that there's a strong trending market, and I'm going to just grab it. Because let's be honest, those fictitious wins make us feel good. There's a dopamine kick. So what I do, Bob, and you don't have to, and guys, none of you ever have to do anything that I say. I don't give trading advice. But when I'm on market replay, there's a pause button. And there's a pause button so that I can stop the market when I want to take an entry, and I can go through my rules. And now the only reason to ever enter a market replay, and I don't have the pressure of a moving market, is if my rules are met. So what happens, Bob, is that if you market replay and you take these trades and you're up $1,400, what you're doing is you're creating unrealistic expectations. You're saying, now I have a magic 8-ball and a crystal ball, and I remember that this went down, and I'm capturing money because I remember it. You'll never predict the market. But if you go through and you pause, and if every trade you take on market replay is rules met, what you're doing is you're showing the potential of following a plan that has been proven more than it loses, to win more than it loses. You're showing a realistic idea of what you could make in the market on that particular day just by following the plan. And guys, I've done this. I'll take 100 lot and I'll fight everything and I'll make 4 ticks. And when I look at this number, it feels good. But I can't repeat that in the real world. So just a little cautionary tale. And this one's perfect. It's a weak bottom, but it's strong triggers. Price didn't quite reach Fibonacci resistance. No divergence. Perfect entry. Beautiful exit. And Bob, if you catch that trade from 12 to 34 is $220. That's $440 worth of profit. If you can capture, let's say you take 3 trades, 2 of them win, 2 of them lose, just like that. You're somewhere around $700 a day. There's a point in a day trader's life where you have to ask yourself, do I need to be in every move? Do I need to be in risky trades? Do I need the butt trades, the indetermination trades? Do I need the no momentum trades to be a successful day trader? And the answer is typically no. And the answer is really, it's not that I need all the trades. I need to be patient enough to wait for the right trades to increase my chance of success. Absolutely, it's highly doable. Great pictures though, Bob. And the lessons, I know that I'm directing them at you because you posted the pictures, but the lessons are for everybody. The lessons for everybody, guys. Practice like you want to play. And we're going to go into story mode real quick because there's not a ton of pictures. And it's funny that this story's coming up on Wayne's picture because Wayne used to work for a motorcycle road racing school, best one in the world, I think. And back when I was younger and more flexible and a lot braver, I used to road race motorcycles. And I was out at an endurance race at Texas World Speedway, and it was a practice session. And during this practice session, I was going at about 60%. It was definitely not race pace. And I was having fun and dragging knees and doing little wheelies out of corners and having a good time. And a buddy of mine blew by me. I mean, blew by me, full race pace, and looked over his shoulder at me when he did. And I knew, I couldn't see his face because of his visor, but I knew he wasn't happy. And he came to me in the pits that day after practice and just didn't even hesitate. He goes, "Mark, what the F are you doing out there?" I'm like, "Dude, it's practice." He goes, "But if you don't practice like you want to compete in the race, if you don't practice like it's real, how are you ever going to be able to perform when it's real?" And guys, that lesson stuck with me. It really did. And I see it so evident in day traders that if you're practicing bad habits, if you're practicing getting lucky, if you're practicing doing the wrong thing, when it's time to perform, you're more likely to do the wrong thing. So that'll be all I have to say about it. But I think that it's important to remember, practice like you want to play. Wayne says, check it out. Odds favorable. No divergence on the small. And it's a 50-50. So best momentum ever. Almost broken, but not quite. Wayne says there's no loss of momentum on the small chart. I have strong triggers. Let me take the great entry. But let me be mindful that the path isn't clear yet. Let me be mindful that it's not a strong bottom. And let me go ahead and get paid. And I'm not going to sit and hope. And better dad, this goes back to your observance of, well, Mark, it's a 50-50. Because Wayne says 50-50, Wayne puts his management hat on. And because he has his management hat on, he gets paid quickly and covers his butt. I mean, beautiful trade, Wayne. Perfect trade. So by identifying your advantages or your disadvantages, you put yourself in a position to manage more appropriately. All right, Cav. Strong triggers to the downside. Triggers are wide. Absolutely. You're in at 04. So Cav's in right here at the base of that one. He has odds favorable, and the mid-band's not behaving as a termination condition. And Cav says, check it out. I'm going to jump in, and I'm just going to ride that momentum down to those yellow 1-to-1s. Is it a high probability trend trade? Absolutely not. And then Cav, the only thing that I could really say about this trade, and this is a lesson. So guys, this is a trade that one of our users created. Getting in at the fib as opposed to letting price get below the fib, Cav, it's very often the difference between something like this and something like that. Does that make sense? These lines can create a little momentum stopping bounce. If you let the back of the price bar get below those yellow 1-to-1s, the likelihood of success goes up like 40%. And I know that because I spent 30 days straight studying this trade. And these small chart lines always have the potential to do this. And it might be a momentary bounce, right? Because notice that it didn't do enough to stop all that momentum and clear path, but it did do enough to absolutely ruin your day if you were trying to take one of these trades. So letting the back of the bar get below those 1-to-1s creates a much larger win percentage. In my own personal study, your results may vary. Caught the first one in the big account and the second one in the small account. Perfect strong top with divergence. Triggers rolled, down, separated. You hadn't quite reached the areas, which means that pullback to the areas in the retracement zone was beautiful. And when you got to the fib, you said, ha, pay me. I know that this could stop the market. And then it turns into a 50-50 trade and you nail it. And you're out at the fib again, and you protect yourself because it's only 50-50. Pete, this is perfect. Guys, this is 2 trades. Well, actually, it's a 50-50 trade. No reason to get out until trouble. Nothing changed. It's another 50-50 trade. Gets paid at trouble, and then notice that it changed. It started back up, and he said, that's not cool. I'm out. My job's to make money, not to hope areas break. Great job on that one. Was that Cav or Pete? That was Pete. Great job, Pete. Man, price triggers turn up, divergence forms, odds favorable, clear path, pull back to the area, all the way to the fib. 6,200 in the big account. Thank you for posting that, Pete. Everybody always wonders, can I make money with this software? Yes. People do it every day. Am I going to make money in the first week with this software? Probably not. You're going to have to go through some normal parts of a learning curve. But thank you for posting that, Pete. It shows what's possible when you believe in a plan, I think. And this is gorgeous, isn't it, guys? The triggers don't break. The market reverses. The momentum is the best of the best. And it pulls directly back to the areas right in the retracement zone. And it continues off to the fib. And guys, this is perfect. This is the perfect trade. The triggers aren't perfect, but the pattern is right. Great job. Cav, that was you, right? Great job, Cav. Boaz. Odds favorable momentum. Oh, I finally get to catch Boaz on something. Strong top. Odds favorable. Not a clear path. Do any of my new users know why it's not a clear path? Do you guys remember that the areas that could stop the market are Fibonacci, yellow 1-to-1s, and perfect trend, a divergence. So this one, price reached Fibonacci divergence. The triggers hadn't broken. This is directly into a termination condition. And my new users are gasping. Oh, Boaz, what did you do? What were you thinking? And then watch this. Boaz says, hey, whoa. I had a strong top. And when the decisions made at a key Fibonacci area are so impactful they reverse the market's more likely to go down. And I had the best momentum that I could ever have in a trade. And this is amazing. And momentum is hard to stop. And I recognized that it was at a divergence low. But I had the lowest risk entry. My goodness, I had 6 ticks and it's worth $60 to see if all that momentum from a strong top will break that area. And guys, do you see how he used his advantages to make a decision on trading into the termination condition? So he enters, his stop's in the right spot, and when he gets back to that trouble, that's where he's out. He used that level of momentum to retest it and to take profits. And Boaz, this is one of the greatest examples of understanding what you're up against, maybe you didn't, and then capitalizing because of the advantages versus the disadvantages. And guys, This is what I like to call the bar fight. My brother used to use that analogy, and it dawned on me not everybody's been in a bar fight. So check it out. I'm drunk in a bar, and I'm thinking about taking a swing at somebody. And behind me is the captain of the rugby team, Mr. Strong Top. And next to him is his drunken buddy from the rugby team, Mr. Odds Favorable Momentum. And then to throw in the mix, I've got the captain of the football team, Mr. Low Risk Entry from an area inside of triggers. But there is the right fielder from the baseball team that I'm about to fight, but these three guys have my back. And when you start talking in terms of advantages, you're like, oh my gosh, I've got so much more going for me than against me. Maybe it's worth $100 a risk. Maybe it's worth taking a shot at. Only you can answer that question. But you'll notice his exit was right where trouble was. And Boaz, you did this great. But divergence lows, my friend, can behave as termination conditions. Like they did there. Like they did here to the tick. Do you see it? And you've got another condition. So, Boaz, you're taking a little bit of your outside of Nexgen smarts and applying it, right? I love that. We're good, guys, but there's good stuff out there that isn't us. But I think that's one of those great examples. Divergence stops it, divergence stops it, divergence stops it. More often than not, trading directly into divergence with no triggers through will stop the market. So you've got to have other reasons to take that trade other than I hope. And Boaz had one that he didn't even list. So great job, great trade. I like the way you handled it. And you managed. Bob be the man. Weak top, odds favorable, potential to break, another pullback. So that was the first one right up here. Didn't catch it. And then Bob says, whoa, that's divergence. That can kill it. 2 divergences. That could kill it. 3 divergences. That could kill it. And then, Bob, what did you miss? You had a 100% termination condition there. What did you miss? It wasn't your high probability trade. It wasn't your 50-50 trade. What trade did you miss, Bob? Or did you say because it went down, I must have missed it? So, Bob, there was a chili dog in there, right? There was just a momentum-based trade. Yeah. Is that trade a part of your plan yet? Because I've never seen you really post it. No? So you didn't miss it, did you? You're doing a little study and you're saying, hey, when this keeps me out of the trend trade, I may have just discovered my next opportunity. I may have just discovered a way to capitalize on this look when the small chart says it's not perfect. I'll let it break through that third divergence, get below it, and I'll see if I can ride that momentum down. Does that make sense, Bob? You probably didn't even realize you're doing it. You're saying you missed the trade, but you're not. You're studying the next trade. You're beginning to let your study, your simulation, your practice, and feedback help you create a plan suited to your personal goals based on your ability reading the indicators. I should say that in class. That was pretty cool. I like it, though. I like that you're doing that. I think it's pretty amazing that you're doing that. All right, Jen. Odds favorable momentum. Absolutely nothing in the way. Perfect entry. And instead of taking the perfect entry, you get in at the top of the bar, Jen. Waiting for confirmation when confirmation isn't needed. And then the market went down. And you had 1 reversal bar, 2 reversal bars, 3 reversal bars. And then you got stopped out. An entry at 82, it went up $200, Jen. That was your KISS plan, 100%. If you're in at 82, Oh no, I'm sorry. At 84, you're up 100, you're already break even. Guys, I love confirmation bars. I love reversal bars to move my stops. There's a time for confirmation and there's a time to maybe avoid it, to get in at the best area. And oh my gosh, Jen, that was the prettiest trade ever with virtually no risk. You tripled your risk with the confirmation bar. That's okay though. You've got to do this every now and then. You got to do it every now and then. Guys, I'm telling you, making a mistake is what's going to get you better. Making a mistake is because you're going to go, oh, I was going to wait for the confirmation bar, but I'm sick of hearing Mark nag. So let's see. Odds favorable, 50-50, momentum everywhere. And I love this. Wayne says, let me get past all the bouncy stuff. I'll get in on the trend trade because it's perfect. I'll get paid on the trend trade. And then I'll turn it into a momentum trade. And I'm not sure where you got out on the momentum trade, but 29.14.8 would have been a great spot. And I'm not sure how far it went down from there. I don't see the exit on the next one. But nice job, Wayne. And then, Wayne, are you in here? Sorry, I got sidetracked. How do I add to a position? It was a chilly fail. It looked like it worked. Did I miss something? So there was your trend trade. Oh, okay. So you took profits. Yeah, that's too tight on a chili dog. That's super tight, especially gold. You didn't even give it a chance. Are you using a 7-tick stop for your chili dogs? My buddy that takes this trade on gold, he had to move it up to like 10 because he kept getting walloped and then running, and he moved it on gold for the chili dog to 10. Do your own study. He's a Yahoo. You don't want to take his word for it. But gold, 7 ticks typically isn't enough on this trade. I don't see any reason to have lost that one. 4, 6, 8, and 10. Right on, so you're testing it. That's just too tight. That's not even 1 bar's worth. You got to give it a little room. Especially gold. Gold's temperamental. All right. So, guys, let's say I'm in a short position. Right here. And I've already taken profits, right? And Wayne, you're like, man, if they get to the mid-band, I'm going to add on. I can be in a position and set up a limit order. Or I can hit sell now and add to it if it turns into a momentum. And even though I'm in a trade, I can sell now and add a position. There's a target filled, right? So no, it's turning into the chili dog. Let me add another position. So you can go all willy-nilly and really do whatever you want to do, adding positions. So Wayne, if you were in a momentum style trade, right? And you're like, okay, I'm going to get paid here, but I'm going to hold 1 for the duration. You could literally say, all right, I'll put that 1 contract back on if the market retraces up here. Does that make sense? Just because you're in a trade, yeah, it's not the end of the road at all. So I like that. And let me see if I can find Bob's. So like this one right here, Bob's into, takes 1 off, adds 1 on the pullback to support inside of triggers, and then he's active 2 again. And the cool thing about that is you already got paid from 70 to 73, and you're about to get paid again from 70 to 73. That's fun, the old double dip. Takes a little confidence, but it's not a bad way. Miss Jen, odds favorable, 50-50. No areas inside of triggers. So you get in on the way down. Absolutely nothing changes except the trade gets better and you're out break even. So, oh, you got paid and then went to break even. I got you. So, Jen, this is awesome. This is a time where a little confirmation makes sense. Everything was perfect except the entry. So you catch it on the way down. Because once you're on the wrong side of the triggers, you don't know if or where the market will stop. And this is a great example of that, guys. Can you imagine selling the mid-band? Here it worked. If you sold the mid-band here, you got completely run over. And that was odds favorable and a clear path. Nice trade, Jen. Very well handled. All right, Better Dad, let's see what we have. Not even a weak top, just a random pivot. I love that. We could still call it a weak top if you wanted to. Odds favorable. Here is open scissors, really strong momentum. Not a clear path due to the one-to-ones. Entry with the mid-band here. Overall, not a high probability trend trade. Got lucky since 2/3 for H high probability and then a 3 divergence passed. I was in the trade that I missed. Focused on the price. Puckered poop shoot here. I love it. I love it. So let me see what I can offer with this one. And I like that you got paid. So two things. Better Dad, if your triggers are way out here doing their own thing by themselves, and this happens on Mondays for some reason, right-click on the chart and reload historical data, and that'll typically get them back in. My charts are a mess Monday morning. I don't know why, but they look like this as well. So I always, that's like my Monday morning to do, is I always reload historical data on a Monday morning. The first entry would have been right here if you were going to take it, but you didn't have momentum yet. So when you take the second entry just below the mid-band in the retracement zone, you're 4 to 5 ticks beyond. The stop makes sense, and thank goodness they didn't get you. They definitely pushed, and then down it goes. So I like it. It's an ugly look here, but the large chart's leading the way. And do you see how it closes the gap to the triggers? And then it heads back down. Nothing changed in the whole time it closed the gap. It still said down. Good reason for a hold. Maybe not the best look. But with momentum and potential to break, it does work out for you this time. Does that make sense? Yeah. But Better Dad, this is the deal, right? And this is the victory that I like to celebrate. Your large chart tells the story of how you're thinking. Your large chart, you told me that you're paying attention to where the market is coming from, whether it's a strong top or a weak top. And you know that that's not a deal breaker if it's not strong. You're paying attention to momentum. You're looking for that separation of triggers. You're insisting on that first advantage. You're identifying whether it's a clear path or not. And you will get a little more in tune with your charts the longer you study them. And you'll recognize that something is wrong with your trigger lines here. But you're still saying, I'm going to get in at the area in the retracement zone, right? So your foundation is built. And I mentioned that. Your foundation is built. Now you're going to learn how to do great things with that foundation. And it looks like you trust the large chart enough to take you right back down to trouble. So baby steps, but you're doing great. You really are. Guys, one thing that I won't do is I won't blow smoke up your ass. If you come in here and you're sideways every trade you take, I'm going to tell you you're sideways every trade you take. But if you're going through that process and thinking it through. It takes time, Better Dad. It takes time. It really does. But look at this one. Momentum. And then Boaz, I'm just going to get you on the clear path. Because again, it's the potential to break. It's not a clear path. But with this level of momentum, with that potential to break, with this low risk entry, it's easy money. Isn't it? I put these pictures up last week. I'm going to open this up real quick so that you guys don't have to watch me fumbling. When you believe in momentum, momentum starts to look like this to you. And we've seen quite a few today where momentum didn't need the clear path to keep going down, where momentum didn't even need the potential to break to keep going down. Guys, momentum is rule number one for a reason. And when you understand the little basic concepts, you start to piece it together. And Boaz, you did it beautifully there. Pete, this was large chart mid-band trade, which means, all right, so we're going to talk about this. Pete says that the market reversed out of nowhere. What does that mean? Weak bottom, right? Guys, it didn't reach an area. It had a clear path, and then it headed up. Out of nowhere. It just, the buyer said, let's go up, guys. And Pete, your triggers look a little weird. And then it reaches one termination, two terminations, three different lines, four different lines. 1-to-1s, 2 fibs, and a mid-band. Does everybody see where the large triggers are when price reaches these areas? The large triggers are a full bar away. Guys, this is what we call the gap theory. And the gap theory states, and Pete knows this because Pete's recognizing patterns. If price pulls away from the large triggers, synthetic triggers, too fast and too far into a Fibonacci area, then it will snap back to the triggers more often than it doesn't. And it closes the gap like a slingshot going back to those large triggers. It's like a vacuum. Pete says, I know that pattern, but I'm not just going to hope that this holds because it could be this one or that one or this one. I'm going to let the market tell me that it's on its way down. And then I'll enter the market. And then I'll get paid aggressively. And then if nothing changes, I'll get some profits. Nice use of the pattern. All right, Bose. Don't be sorry. Don't ever be sorry in my room, please. Whoops. I'm going to take the picture. So this is a great lesson. So my first question, Boaz, you say it passed. What is it? Price? The price bar's passed. This is where I've got to know what you're thinking so that I can apply the lesson. Hey, Cab, have a great one. Okay, so price passed. Okay. So here's the deal. You're going to like this lesson, I think. So the rules for a termination condition, and Boaz, I always go back to the basic rules. The rules for a termination condition is first, price reaches an area. Then I'm done with price and I let the triggers tell the story. And remember, Boaz, this is 101. This is basic understanding. So right here, price reaches the area. The triggers remain above. It's a termination condition. Everybody's usually pretty good with that. But once we get to this point, it's 100% on the trigger lines. So we go from price reaches and no trigger lines through, and then we go to the small triggers are through, but the large triggers are not. And what this look means is this area has the potential to break. And Boaz, an area is not considered broken until both lines of both triggers get below the fib. And this is where it's a clear path. Because what happens, and you see this a lot, of course I'm not going to see it on the S&P because it's been crazy. I think crude had a lot of them. No NASDAQ. All right. Man, I'm struggling here. Hold on. So the price bars are breaking through, but the large don't, and it's that potential to break, and it ends up not breaking. And this one had the potential to break, and it doesn't break. And the look that you're doing, and there's that gap theory, mid-band snaps back, and the way you're talking about them, Boaz, is the way that Ron uses it. So I also want to talk about how your thought process isn't necessarily a bad thought process. It's just not the 101, and since it's a 101 class, I go back to 101 rules. But I think you'll like this lesson, and I think that everyone else will. Whoops. So the basics for termination conditions, and I'm going to start dragging my feet because we're almost out of pictures. Every day when I teach to start termination conditions, I say price reaches because decisions are made at key areas, and price is what sets off the decision process. Is everybody good with that? That's why the first part of a termination condition is price reaches the area. Because somebody's likely to make a decision at this fib that might screw up your good time. So Boaz, when you say, but the bars get south, essentially what you're saying is price is no longer on top of that decision making. Price has already exceeded the decision making point. So Boaz, I like your concept of it. I really do. If you're taking trend trades though, because remember, it's the retracement. Until both triggers get below, it's just not a clear path yet. But if your price bars break all the way below or away from the decision-making process, look at where your entry is coming from. Your entry is coming from the pullback to the decision-making process with every indicator screaming down. Pretty cool, right? So I don't know if you did it on purpose. I go back to the basic rules in the room that say small and large have to be through. But I think the mentality behind the way you read it, and it obviously it works for you really well. It makes sense. Fundamentally, it makes sense. It's just kind of the next step. A lot of people, Boaz, when the back of the bar clears here with momentum, they're taking an entry right here. They're jumping in with that momentum, hoping it pushes. And the trend trade is just capitalizing on the small charts, loss of momentum, when the large chart says we're going. So I like it. Did that all make sense? I hope that made sense. But that's why I refer to it as not a clear path. I see how you're doing what you're doing. So I don't want you to think that I'm knocking you. I'm keeping it consistent for the newer users that need a little more security in their reads. Oh, and Pete, we saw this one. Did you double post? Or did I just double click? It looks like I just double clicked. I like it. I like your plan, Boaz. You're one of the most consistent traders in my room. And everything you do looks exactly the same. There's something to be said about that. So guys, I'm going to take a break. We made it through the second hour, and I'm out of pictures. And when I run out of pictures, guys, I rely on you to help me create an awesome classroom. So if there's something on your mind, something you're thinking about, something you're working on, something you're not sure of, post a question, post a picture, ask it. I'm going to go stretch my legs real quick. When I come back, we're going to answer all your questions. So go stretch your legs. And I'll leave you with crude oil and a little bit of a mess. Back in a minute, guys. All right, y'all. Let's get back at it. And Better Dad, I saw that you put an apology at the bottom of your multi-postings here. Don't ever apologize. If more people would do this, more people would get to where they wanted to be. Um, Guys, you've got to be selfish with your time. You've got to demand fee. You don't have to demand it. I'm going to give it to you anyway. But I cordially invite everybody, if you're studying, give me all your study pictures. Let's talk about all of them. Let's make sure that you're understanding the lessons. Guys, this is how you get to where you want to be. The record, Wayne, 77. 77 pictures in one classroom. And man, but Wayne, there was some awesome lessons in there. Like there really, I think a lot of people came out of that better. And I'm telling you, this is how we do it, guys. Will you do me one favor, Better Dad? Bump your font up a notch or two. I'm old. All right, so let's see what we have. Weak top is since the small triggers are through the fib. I agree. That's okay. One of the cool patterns, Better Dad, is when you had a weak bottom, a lot of times it tries to push up and then just heads back down. So even as though it's not a strong top, no big deal. Odds favorable, perfect, open scissors, the smalls are below the large for a short. 100%. And look at this, clear path. The large triggers are below divergence. There's nothing immediately in the way. This is the perfect large chart read, guys. Odds favorable, clear path. So we go to the small chart. And on the small chart, I want to see... You didn't take this one because it wasn't clear yet, but once it got clear, here's your reversal bar. Enter 2 ticks below the midband. Stop keeps you safe. And down it comes. Profit target 1, and now you're break even. Closing position here is divergence prints. The risk is too high. So let's talk about management. No, I love this. You didn't take any? So check it out. If I'm in at 42.4, at 41.4, it's $100. At 44, it's a $300 trade. Do you see that? So the KISS plan, Better Dad, is a $300 trade on this particular look. Your trade is $100 plus divergence prints right about here. It's a $200 trade. Just getting paid. And then here's one of the deals, and you're going to like this. Nope, I think this is perfect. 1, 2, 3 divergences. It's an exit condition. I would say you handled this one beautifully. I would say you handled it beautifully. If you don't take profits there, you respected the exit condition. Nicely done. Perfect entry. Get paid. That's the goal. Reduce exposure. 3 divergences pushes it up, but it pushes it right into another trend trade with odds favorable and a clear path. Maybe that's a re-entry as you grow with the software. Nice chart. Great large chart lead. When the large chart's perfect, things seem to be easier. So let's see what you said here. Mixed picture here. 3 low divergences on the large chart, which is a termination condition, so this should not be traded, but for fun, let's analyze it because it's good practice. All right, so 3 divergences, that just means no short trades. Odds favorable, open scissors, absolutely. Not a beginner trade. Truly would not have traded this. Mark, don't scold me. Well, I'm trying to figure out what you did. Because this says you had a termination, a reversal, odds favorable, no termination, perfect look. So if you entered here, it's beautiful. First profits here is beautiful. Second profit's here with divergence. And is it just me? 41.9? 41.9? So Better Dad, the only thing I can scold you about, you're going to love this, is that you could have exited at 41.8 just below resistance, just below that potential termination condition, and gotten an extra 5 ticks out of the absolutely perfect, odds favorable, clear path, perfect entry, beautiful stop placement, get paid. I can't find anything wrong with this. What do you think was risky? You said, see, the 3 divergences on the large chart, Better Dad, said don't go short. They said don't go short. That's what set you up for the long. This is a strong bottom. Pretty cool, right? Now, if you had gone short into 3 divergences, that would be problematic. You went long, straight from a termination condition, with momentum and nothing in the way. This is the absolute best of the best scenario ever. Does that make sense? A little directional misunderstanding. See, okay typically means people don't understand. Okay, I just want to make sure. That says no more shorts. That also says any trend trade taken after it is the best of the best scenario. I love this. I love everything about it. I love that you didn't go short into it. And I love that you had the patience to wait for it to roll and take the perfect entry. Nicely done. All right. No idea of the tops. Not essential though. So let's talk about that if we could. Price reaches resistance. Large go from green to red. That's a strong top. 100%. And it creates momentum. And you have a clear path. And it pulls right. This is one of those exceptions. Oh, see, this is a weird one. Good morning, Miss Cindy. Because your areas are a little bit outside of the triggers. Let me see what you wrote. No fibs, 1-to-1s or mid-band inside of entry window. Mid-band is close but not congruent with the rules. Looks promising, but no trade here. Can't take money I don't risk. Awesome. So, Better Dad, can we show you next level? And this goes off the premise of once you know your rules. And I'm going to type it out because some people like this, and I think it helps me. Okay. No areas inside of triggers, no trade. 100% perfect rules adherence. Does that make sense? Rules not met. Perfect. And guys, if you choose not to take this trade, you're going to pet the dog for 30 seconds? Okay. Oh, I see what you're doing. Guys, if everything on every chart is perfect, but your entry isn't, that's where waiting for a little confirmation bar might be your next potential entry. That's when it's appropriate to use confirmation. Everything on the large chart is rock star perfect. The only thing is my entry isn't, and I don't want to get in on the wrong side of triggers. Maybe I get in on the way down. That's it. But if you choose not to take this trade because there's not an area inside of favorable large triggers, as a brand new user, I'm going to support and high five that decision all day long. And once you have a little bit of experience, you'll know when to change, to fudge a little bit. So for the brand new user, Better Dad, gold star. 100% rules adherence. Learning the rules like a scholar, so eventually you can break them like an artist. Are you back from petting the dog? Awesome. All right, so here we go. Weak bottom, since no fib divergence are 1-to-1 at the pivot point. Odds favorable because the smalls above the large triggers an open scissors configuration. I love that stuck. Clear path here, but maybe not, as I might have to need this bar to close before the large triggers would have flipped over the fib. Otherwise is clear. You're making a judgment call there, right, Better Dad? Pulls back to support inside of the window, doesn't go below the triggers. And with this level of momentum, we're going to call it a clear path. It goes right to the fib. And your target is 2 ticks below the fib. Once again, this is perfect, right? Everything tells you it's more likely to go up than down. And you pinpointed exactly where it was more likely to go up than down. Entry is 2 ticks above the midband. Absolutely. No, I think you took the right entry, and you knew where it might go, and you knew where it shouldn't go. And Better Dad, it's easy in hindsight, right, to say, maybe I should have waited for the lower one, because you can see that it went to the lower one. What if you had done it on this 50-50 trade? If you said, well, the more conservative entry is here at the lower one. You missed the trade. It's that window, and you did it perfect, and then you trusted the momentum and path to get you to the next key area. And look what it did. This is why hope. When I tell the room every morning, you'll understand where the market is likely to continue. There it is. You'll understand where the market is likely to go. There it is. And that likely to go spot actually typically turns into a where it's likely to stop spot, which is why getting paid at lines is so amazing. Great job. I feel like your study's going okay. Weak top. Oh, here we go. We get a top lesson. You're going to like this. We came up with this analogy in the room a couple weeks ago. So there's your area. I want you to think of trigger lines, ladies and gentlemen, as a car. This is the front end of your car, the top line. This is the back end of your car, the bottom line. If your car doesn't get to the other side of that brick wall, you did not make it through the brick wall. So, if both lines of the small triggers don't get north of these 1-to-1s, you can still have a strong top. Does that make sense? So you actually did have a strong top here. And then you did have momentum, and you absolutely had a clear path. No. So if only one gets through, it can still be a strong top. If both triggers get through, then we're going to pull it out of the strong top scenario. That's why when we teach the potential to break, I say those small triggers have to smash through the area, because it guarantees people are letting both lines get through. So you have a strong top, you have odds favorable, you have room to trouble. Let's see how you entered this one. The entry window is too large. The bottom should be around where the window is. So that's your first area in the window. There's your second area of the window. The stop would have been perfect. But your entry, Better Dad, not here, up here. From where you pointed to where the entry is about 40 or 50 bucks per contract. Remember, it's not the triggers. It's the areas in the retracement zone. So your risk going into this one is approximately $140, $150 per contract. It's not outlandish for having odds favorable and a clear path. But once it heads down, the risk is reduced. And you said entry here at the mid-band, or the 1-to-1, since it's a short. Yeah, the window's a little big. That's okay. I got you. I got you. So, do you see how you're saying since it's too big, get in on the way down? Better, Dad? It's not perfect. This bar right here, that's your confirmation bar. You could use that for entry, and then your stops above the confirmation bar. And it might get you a tick or two. Does that make sense? This is confirming that odds favorable momentum and a clear path has begun continuing down. That's what we call a confirmation bar. That's the one that redefines where your stop goes. Awesome. So it would have been similar. Profit target 1 at the potential bounce point, profit target 2, 2 ticks above the fib, and it worked out beautifully for you here. Once again, great trade. So the language that I like to use is if my entry isn't perfect, whether the window's too big, the triggers are so split, if my entry isn't perfect, I'm okay waiting for a confirmation bar. If my entry isn't perfect, I'm okay waiting for a confirmation bar. Yeah, no, you're doing great. But we're pretending like you traded. We're pretending like these are trades that you took, and this is feedback that you would get. Because the feedback would be the same, whether it's a read or not. All we're doing is talking about your read. So, weak top, strong triggers, odds favorable, clear path, everything is solid on the large chart once again. Price never really gets inside of the trigger. The box was drawn too big. Here there are no fibs, midbands, or one-to-ones in the proper window. I agree, 100%. Maybe no trade. And then it comes down. There's your reversal bar. Pulls back to the lowest area inside of the triggers. It could have gone there. Stop goes there. I agree 100%. First target, second target. So what you're doing, and guys, I hope you're paying attention outside of just Better Dad, is everything that he's done, every read that he's put on these charts, he's using the language of the rules. Every time he's looking to take a trade, he's not saying, I hope it goes down, or I think it's going down, or it might go down. He's saying, I have momentum. I don't have a termination condition. This is how I define my area. And Better Dad, I don't know if you realize what an amazing, intelligent approach this is. And you're defining your stops. And then what I would do is add to these reads, after the reversal bar, this is my new stop. That would be the only thing you could really add to the read. Is once I got this reversal bar, my new stop was 2 ticks above it. And you're trying to outthink yourself, right? Follow the rules, follow the stops. Great job. Consistent. Telling you guys, you don't have to take trades to become good at this software. If you take pictures and write on them, you'll be absolutely floored at how good you can become at the software. And Better Dad, when you get in front of a live market, you know exactly what you're looking for. Odds favorable, open scissors. I love that you go through that every time. Odds favorable because. Weak bottom because. Triggers have cleared any trouble, lots of space. Clear path because. I love it. I love it. Reversal bar prints. Triggers define the retracement zone. Areas define the potential bounce point. If you put it a couple ticks above, you may or may not have gotten this trade. Because your midband might have been a little bit lower, Better Dad. You may or may not have gotten this trade. But if you had, first target is perfect, second target is perfect. Tell me why. So I teach this classroom based on my own failures. And I teach this classroom based on my own mistakes, and I teach this classroom based on the challenge that I had. And Better Dad, by telling me why, you're telling you why. I know why. But if I can convince you guys to tell yourself why, it becomes repeatable. And that's what we want, the same darn thing every time. Because the whys on this chart, and 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 this one, and this one, and this one, they're all the exact same whys. They're all the exact same pattern. And Better Dad, have you taken enough of these pictures to believe that this pattern wins more than it loses? Isn't that cool? So now, even because you understand the whys, if you take a loser, you're not going to go into human default mode of being mad about it. You're going to double check your whys and make sure that it was the pattern. I love it. Guys, this is how you get to where you want to be. Weak bottom. I like it. Strong triggers. Absolutely. Clear path. And this one was hard for me to tell. And Better Dad, this may be your first mistake. And when I looked at this before, do you see how price reached already? And that's what created your tail. This one was taking a trade into a fib. With the best momentum ever. And I misread that when I looked at it before. You are going into the termination condition. The pattern's the same. So this is one of those things. Better Dad, this should have been a no trade, right? It doesn't fit my rules. I'm a high probability trend trade. This should have been a no trade. But because you went through the whys, can't you say, I do have strong triggers. Best trigger look ever. It's not a clear path. But if I entered at the area inside of triggers, my risk is only $70. And with this level of momentum, you can say, I'm willing to risk it. I'm willing to take a shot. Maybe I let it come and then start back up and manage aggressively. And then profit target 2 was at the next fib, and it almost made it. But you did have 3 divergences in the same range, right from that same fib that was behaving as a termination. I think that the intelligent trader, or the rules-based trader, would have had to take an exit right here and just been okay with not catching the rest of it. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 pictures, Better Dad. 1 mistake. And a lot of learning opportunities. I love it. These are helping you. Thanks, Trina. It really does. I think everyone posting in the room, I think there's so much to learn. And if you're paying attention to other people's charts too, there's so much to learn. It's pretty cool. It really is. And there's so much more you can do with this software. Like, this isn't all you can do. But if you believe in termination conditions, guys, you've done nothing in crude oil for the last hour and a half. And the S&P has forced you to be patient. 90% of your day is doing nothing. There's the NASDAQ. NASDAQ is psycho, though. Not for new users. That's awesome. I love it. Thank you for posting those. It's not about taking all the trades as a new user, guys. It's just learning the basics. And then once you learn the basics, you're going to find your way. I got a message and I got a DM on the break from the gentleman that's been with Nexgen for a really long time. I don't know how long exactly. But he accidentally showed up in my room, which I think is kind of cool. And he thought I was John's son, which is even better because I'm only 2.5 years younger than John. But I think one of the things that stands out to me is there are so many Nexgen users that are still Nexgen users 5 years, 10 years, 15 years, 20 years later. And it's because it works. And I think what you'll find is that every user gets to where they want to be at a different rate. Everybody has an aha moment at a different time. Everybody gets that click in a different way, and you're doing great. And it's awesome, though, because everybody finds their own way. And part of finding your own way means that you have to try other people's ways, and you try other people's trades, and you try to do different things. And I just think, I don't know, I get giddy when I see people that have been Nexgen users for 10 or 15 years coming back. Better Dad, have a good one. Oh, bring them all to me. Miss Trina's going to put you on her Christmas card list for helping her out, too. Have a great afternoon. Did you get my email? Did my email make it to you? Okay. Cool. That was the first thing I did this morning. So if it's grammatically wonky, forgive me. Hamid, you exceeded your daily goal. Done for the day. I love it. And I love that you just pop in the room to tell me that. I think that's pretty awesome. You know, I've got a really good friend of mine that I gave a computer to, and I got him software, and I taught him one trade. I taught him Ron C's chili dog trade. And it's amazing because he's super cerebral, and he's following rules, and he's making money, and he's 40 days in, maybe. Quit his job, never leaves the house. He's a professional bum now. Making money in his underwear. What a wonderful thing. It's a good thing. Guys, we've got a little bit more time. Is there anything else I can help you guys with today? Outstanding day today. Great pictures. Oh, JK, you snuck one in on me. We're still going, guys. Oh, it's interesting that you took that one. Because I was just looking at that chart, JK, and I was saying to myself, I wonder if anyone caught this one. Wayne, 8:35 for the day. Now you got to work. Man, it is my respectful and humble opinion, Wayne, that you don't work, my friend. You get to do for a living what any of us that love engines would do for free every day if we didn't need a paycheck. I feel the same way about tattooing, though. It's when you get to do something that you love, that you're passionate about, it's pretty cool. Teaching this class fits the bill, too. It really does. So JK did this. I want you guys to see this. Termination condition. Everything is up. The momentum is strong. And he's trading directly into a termination condition. JK, did you recognize that that might be problematic? Could be, maybe. No divergence, strong triggers, perfect entry, and he gets out at trouble. I love this trade. He can see on a small chart it didn't quite tap it. The momentum is strong on 2 charts. The entry is clearly defined, and he doesn't hope. He just rides it right back up. It's a $140 trade. He didn't even have room to make $200 on this trade. But the execution is freaking amazing. Nice job, JK. Telling you, you'll find it. You'll find it. You just got to learn how to work it, guys. It's the world's greatest hammer. You're learning how to swing it. And that's all we do in here. Repetition, over and over. I'm excited about this week. I'm pretty gung-ho about this week. I don't know why. I woke up today. It's the time change because it stayed light until 8 p.m. last night. I'm a sunshine person, so thank goodness. It'll be 85 and sunny today. Life is good in Texas. Any questions? Anything I can help with? Let me end the YouTube